What's going on, y'all? Rashard here from Infinite Life. So I know a lot of people want to know or want to see what a whole life policy look like, right? So today I'm gonna show y'all a whole life policy. So we got cousin Pete, cousin Pete, 25, standard, no tobacco. This is his rating, right? His monthly premium is 225. So this this policy, how it's structured, is 60-40 split, right? 40% goes to the cost of insurance, 60% goes to his bank, his savings, which is the cash value, right? Because we're using these policies as a storehouse for money, to run our money through. So this is what these policies is for. This is what we design them for, right? So his monthly premium is 225, right? So we got the first 3 years, I got him putting in $10,000. Now, no matter what, no matter if he takes the money out, use it, repays it, it doesn't matter. Once the 10,000 goes in and he takes it out, it's still going to show the 10,000 in there because it grows uninterrupted, no matter what. So the more you put in and you take it out, it doesn't matter. It grows uninterrupted. Okay, so the first 3 years we got him. It's going to say 12,700 because they adding on the 225 a month, right? So the first 3 years we got. Let's look at the first year first off, right? The first year he put in 10,000 plus the 225 a month, right? But like I say, 40% goes to the cost of insurance, 60% goes to his cash value. So off the back, he got $11,183, right? A $384,000 death benefit off the back, right? And then the dividend. We can't forget about the dividend, right? 584. That's good. Now his money it's working for him, So we can reallocate that back to his policy so it can add more cash value to it, right? So let's just look at year 5, right? Year 5. Now over here we see he only put the 10,000 in for 3 years. Now year 5, now he 225 a month to 2,700. Now we're gonna go on this side, right? $465,000 death benefit. Now, as the cash value grows, the death benefit has to grow. They has to grow. When one grow up, the other one has to go up automatically, right? So if we look here, right, he have put in $43,500 into this policy. This is what he has put in so far, right? Now look at the cash value. Look at his bank account. It's $43,719. Now he didn't broke even. Now the policy is actually on the positive side, a couple $100 now, right? Okay, so now look, right? Let's look at year 10. Year 10, 66,000 and I mean this is what he has in his cash value and this is what he has put in, right? Look at the dividend. Almost $2,500. Look at that, right? Look at the death benefit, 507,000, right? Okay, so now I made this policy with a 30-year rider, right? 30-year term rider, right? So that means he's able to overfund his policy for 30 years, right? So if he want to, he can put $10,000 a year into this policy. Cousin Pete can put every year for the next 30 years, he can do that, right? But for this example, we only did it for this 3 years, right? So let's scroll down to the 30 years because this is when the term rider fall off. So we're gonna just go to the death benefit real quick. 744,000 to 435,000. Now that's a big loss, but that's only because he's not overfunding the policy no more. That's the only reason it drops like that. But it's still at a good amount no matter what, right? Now, let's look at the cash value. $254,000. But look, he only put in $113,000. And then, not to mention, after the 30 years, the premium go down now. The money payment goes down now because the term rider falls off. So now look, now the policy is really working for him. It's really working. So now let's just go down, right? Because this is a policy that's paid up at 75 for cousin Pete. It's paid up for cousin Pete at the age of 75. He ain't got to worry about it no more. It's over with, right? Guess what? Cousin Pete still gonna get a dividend. He gonna get a dividend too, and as long as he here, right? But now look, now this is what he has put in so far from the last year, $156,000, right? Look at the cash value. Look at his bank account. You moving and grooving, you buying property, you doing whatever you need to do within this policy. And you repaying it back, you paying yourself back with interest. This is how the game is being played. Look at it. Look at it. With an $866,000 death benefit. Look at the dividend, 21,000. This is something to consider. I would say everyone need a policy like Cousin Pete. Overfund them, get the max cash value at them, store your cash here. This is one of the best vehicles right now. So, if you want to learn more about whole life policies and how to use it, become your bank, you want a one-on-one meeting, let me know. I'm here. Stay tuned to the next video. Thanks.
Extra. This shit is hard.